Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 27th of February. I'm starting off with APR Energy, where you can see what a cup and handle formation looks like. This is probably the sort of most ideal formation in charting, and a fantastic example of this on the chart here, basically panning out from the beginning of November. The candle here, top of the handle resistance was the initial February resistance at 324 pence. That's now the end of day close stop losses as we look for further gains towards the 200-day moving average at £4.47. If you want to sort of trail your stop loss, probably you'd start with the 10-day moving average, which is at 301 pence at the moment. But as that's quite a long way away, end of day close back below 324. Probably the best stop loss at the moment. It is difficult to go in now, obviously, because the RSI is 18 overbought, but we do have a momentum trade on our hands, and as I said, the upside here possibly as much as £1 in terms of the initial 200-day moving average target over the next 2 to 4 weeks. Stock that is new to me is Etheric. Massive gap to the upside yesterday. Obviously, the RSI at 98, totally overcooked, so we would be expecting some kind of pullback. Favoured area to pull back to would be the top of the gap, or sorry, the bottom of the gap at 39 pence, or the old resistance from May last year around the 36 pence level. That's probably the end of day close stop loss in the first instance if you are going long of the shares, or you are long of the shares. But at least at this stage, only back below the floor of this rising trend channel from last year at 33 pence would be outright negative. So you have that kind of leeway. The upside here as high as 60 pence, which is last year's resistance line projection. Next up is probably one of my favorite stocks of the recent past, largely because it obeyed charting rules. It's Gfinity. The buy signal here came some days ago when the shares broke back above the initial support from December. That was at 20 pence. So we had a gap through that support earlier this month. End of day close at around the 21.75 pence level on the 18th of February was the buy signal. You could have bought the next day around the around the same level, 21 3/4. Went up to 28 pence. Top of the channel from December looks like it's at 35 pence. So still some more upside to go. Initial stop loss maybe 26.5, which is the actually the top of the handle, in fact, or the top of the handle on this formation here. This is a cup and handle formation as well. Trading the stop back at 23.25 pence if you don't want to be so close to the price action. Next up is JQW, where we're not chasing a rally, but we're actually trying to look for the floor in the stock. Here it looks like we've got a falling wedge breakout through really the 12 pence level, which was broken yesterday on the close. Yesterday was Thursday. So basically looking for decent upside here. Above, let's say, the 10-day moving average is 11.31 pence. We were looking for a retest of January resistance through 22.5 pence over the next 2 to 4 weeks. If you're cautious on the shares, maybe wait for an end of day close above the 50-day moving average at 14.5 pence. But with the uptrend line in the RSI window and the bullish divergence that we've seen over recent weeks, it looks as though the momentum should be back in favor of the bulls and in favor of JQW. Finishing off with an old favorite, SolGold, where there's been a rather nasty pullback from the peak, the February peak, just through 5 pence. It looks as though this process may be complete now. Support coming in as expected towards the 50-day moving average at 2.91 pence. If you're cautious on the shares, maybe wait for an end of day close back above the 10-day moving average at 3.53 pence currently. But as I said, probably going long towards any dips towards the 50-day line would be the way forward, and targeting a retest of 5 pence over the next month or so. That's it from me. More updates on masterinvestor.co.uk.